Good morning. It's September 24th, 2019. This is Ron Brown. I'm beginning a series of videos using files that I've created for HGS Investor software, and I'm also going to be using thinkorswim for my data, for the intraday data, and I hope to keep these videos pretty short because I don't want to overwhelm you with data. So I'm going to get started. First of all, I want to show you that I use a program called Max2, and that is to divide my screen so it's easier to do analysis. If you want to try this program for free, just go to max2.net. That's maxto.net. Download it, and you'll see what I'm going to be doing with this. So I already have the program loaded, and it's going to tell me that, so I've clicked on it, and now I'm going to locate it over here. I'm going to right mouse click, and I'm going to say change regions. I'm not going to change the regions, I just want to show you the layout that I'm currently using, and this is for my top-down analysis. I use what is called the warehouse view over in this window, and then there are two charts. I put a daily chart here and a weekly chart here, and if I want a monthly chart, I just drop down to the monthly. Now when I get into stock analysis, I'll use a different layout. It's very easy to change the layout. You just go up here, click on load preset, and this is the layout that I'll be using in the future. I call it 3 charts warehouse. I just label it that way. This is the one I'm using right now. Very helpful program. Okay, I'm going to go ahead and use these regions. I'll bring up HGSI Investor. That's what I call it. I'm going to click on the warehouse, and you can see that I have the warehouse right here. Now I want to choose the group that I'm using. I'm going to go top down, and I'm using a list of stocks that I created. I call it my major market analysis user groups. Now if you want these files, if you want to get started with HGSI, you can download the software, and you can join the Insider Club if you want to use my files. Otherwise you can do your own. But I'm going to go on Major Markets Plus to begin with. And then I'm going to go over here to my top-down analysis folder number 1. And this gives me a view of what happened in the market yesterday based upon the one-day percentage price change. Now I'm going to fill out my layout. I want this one just to go down to the bottom, so you just double click and it stays there. This is a price and volume weekly chart. It's a line chart, and I'm going to bring up another charting window, and I'm going to what I call my fractal layout charts. It's a daily chart. I just put it up here. By double clicking it, you can see that the windows snap into place. Now I'm going to go back to the top. It's an ETF in this case. I call this Major Markets Plus. What I did is I put the major markets in here, and I rounded it out with some ETFs, so I can immediately see that yesterday the silver, the SLV, and the GDX are at the top of the list, and here's the percentage price change for the day. You can quickly get a read on, or I can quickly get a read, and you can too if you start using the software, on where the strength was yesterday. Now, semiconductors have had a really good year, and they pulled back a little bit, but I can see that there is some emergence here again of the SOX. It was up 1% yesterday, but the out of the top 4, you can see there's silver, gold miners, and gold ETFs that are leading the way based upon this view. And this view is a view that I put together, and my combo rank, which drives the ETFs and the indexes to the top, is a percentage price change 1 day. And as I go down the list, I can see that the volatility index, or the VIX, is at the bottom, down 2.7%, which indicates that there really isn't a lot of fear in this market based upon 1 day. What I want to do, though, is I want to look at a longer term. There's no volume associated with the VIX, but I can see that this is not a fearful market. This is a weekly chart. This is a daily chart. The VPA flags mean nothing on this chart because there's no volume associated with it. So what I'm looking for here is to see where the range on the VIX is. I'll make this weekly chart full frame. When we get in a fearful situation, you're going to see VIX spikes like this, and we're down towards the end of the bottom of the range. It isn't this low, which is extremely low back in late 17 and early 18, but it's in a range where there's a lot of complacency, I would say. As I look this over, I'm going to look for the NASDAQ composite. You can see it was down 0.1% yesterday. This is a 5-day. So it's just been kind of drifting recently. It's you can see sideways movement here on the daily. This is the weekly. It's up near the long-term resistance. And the bias, well, I would say it's neutral. And the reason I'm using a weekly line chart is it's easier to see the higher highs and higher lows. So we had a higher high here, and it pulled back to this area. It's turned down a little bit from here, but this would not become a lower high until it takes this area out here. So this is why I'm saying this market, or the NASDAQ at least, is stuck in neutral. Now I'm going to go to a different chart here, and this is up in the market charts. I'm going to use the NASDAQ internals, or this chart right here, and it's a daily chart. And what this does is it shows me the internals of the NASDAQ. I'm going to zoom in a little bit here so we can see this better, but these lines down here represent advancing issues versus declining issues, and here is advancing volume versus declining volume, and this is new highs versus new lows. You can see everything's kind of in a neutral position right now, as is the NASDAQ. So I look at this every day. If I really want to look at inside the numbers, I can hit my alternate I key and see what these numbers actually are, but I usually just look at it visually. You can see this range. If I look back here, we're just kind of stuck right now. Now if I drop down to the next chart, new highs versus new lows, on the sell-offs you can see the new lows spike. I'll put a crosser on here, but we're a long way from that. The new lows are down in this area. The new highs are right here. It's a stalemate. Next, I go down to Ian Woodward's multiple price, or multiple indicator chart, I should say. You can see that the longer-term indicators are still pretty strong, but the force indexes have turned negative due to a volume spike here, and you have to be careful about this because this was options expiration. I believe it was quadruple options expiration, so that's going to affect the indicators which are based upon price and volume. And by the way, I only use indicators which are based upon price and volume. Now the NASDAQ is just one phase of my market analysis, and I can do this very quickly when I'm not talking. I usually go to the NYSE, look at the same thing, And I just jump up to the NYSE chart. I'll make this large, and you can see that it's really very similar to the NASDAQ. If I look at the new highs versus new lows, pretty much similar all the way around. So we're in a neutral sideways market at this point as I'm doing this on September 24th. I'm going to minimize this, and so where is the strength in this market? Well, there's several ways you can do this. I'm going to click on the ranking module in HGSI, and this is comparative relative strength of the SPX. This is 26 weeks. That's a pretty long period. That's half a year, but you can see over this time frame that gold miners, silver trust iShares, gold spiders, and the bonds have been strong. This is a percentage gain compared to the S&P. In other words, the gold miners have outperformed the S&P by 23.22% over that time period. I'm going to shorten this up. Let's just see what has happened the past 2 weeks. And you can see that the gold miners are still up near the top. The VIX is up 9% compared to the SPX. Gasoline has risen. Here's the silver iShares Trust, oil funds, and so on. This is with the strike on the Saudi oil fields. You would expect a spike up, and this is what's happened over the past week. Now, if I drop down to the bottom, you can see that the transports are down around 3.5% compared to the S&P, and you would expect that with the rise in oil and gasoline. I'll just click on this and bring these charts over here. I need to go to a different chart, though. I'll just go to a daily chart on this, and you can see that over this time period that the transports have been going down. This is a daily, this is a weekly, and let's compare that to gasoline over that same time period. Now, gasoline spiked up here. It really hasn't done much yet, but it did affect the transports. Let's look at the oil fund. Same thing, I assume. Big spike up on the news, and then it's really not done much. Some quick profit taking, and it's really not done much since. In HGSI, it's really easy. It's actually better to look at both the charts and let's say the warehouse and the ranking modules, because you get different insights into what's going on. Now I'm going to change one more thing. I'm going to go to 1 week, and let's see what's changed. Not much. You can see silver and gold are on top, but here's that semiconductor index that I talked about. It's starting to show some strength. Now look at the VIX. It over a 1 week period, notice it was up here over a 2 week period. Now it's dropped down to number 25. I'm going to take a quick look at the SOX, and I'm going to end this video. I'll zoom out a little bit on this. You can see that the SOX had a really nice run here, then a sharp sell-off. Let's see, what was that, about 2 months ago, month and 3 weeks ago. And then it's been working its way higher, and it's up here close to the resistance area. I'm going to quickly change this to a weekly chart where we can easily see where the resistance area is, and it looks like it wants to possibly go higher. Now here's the weekly chart. Here's a lower low. Here's a higher low. Here's a higher high. This is where it came down and formed a lower high and then a higher low, and it got back up here to the resistance area, failed again, but it didn't come down all that far, and it actually came up here on the weekly chart and took out this high. So this is a higher low here on the weekly chart, and it looks like it could possibly go higher. Remember, this is a contains 30 stocks. And to see what these stocks are, I have to go to one of the HGSI indexes. So what I'm going to do is I'll just go up here to the top. You can see how easy it is to move around the program. I want the I don't want the ETF component. I want to scroll down here to the major market index components, and I'm going to go to the semiconductor index, and this shows me the stocks that are contained in here. Now I said there are 30 stocks in here. There are 30 stocks. Here's the index. So anything that is above the index, I'm comparing the RS versus the SPX for 1 week. These stocks that are above 100, 100 represents the SPX. Anything above 100 is outperforming the SPX, and anything above here is outperforming the index. So what's the number one stock? It's CRE. It's outperformed the S&P by 3.71% this week. I'm going to bring it up quickly, and I need to get back to my daily chart, and this is the way it looks. You can see that it fell off sharply. There are some nice VPA flags indicating that there was some accumulation here. Here's an effort to rise, another effort to rise. Little flag being formed. It pulled back. The weekly chart still looks fairly weak on this, but you can see that buyers stepped up, and on this date it was 41.78, and what's the closing price on this date? It is up to 51.60. I'm going to move down to the weekly chart. I'll put that crosshair on. You can see that this is a higher low, and if it takes out this area right here in the weekly chart, that would be a higher high. You just discount this area over here because it is starting to form a series, hopefully, if you go along the stock, a series of higher highs and higher lows. It isn't quite there yet on the weekly, but let me change this to the daily chart, the line chart. You can see it a little bit better here. It's getting to the point, if it takes out this high right here, this is going to be a higher low and a higher high. Now, before you ever consider taking a position on a stock, you want to know when the next earnings date, and it is coming up on the 30th of October, so that's over a month away. But after this tremendous selling here, you can see that buyers stepped up. Here's a lot of fear. You can tell it's extremely fearful because of the volume, and then the volume starts to subside, start seeing some accumulation right here as the market solidified a little bit. Buyers stepped in to this stock. So in summary, what I do here, I looked at the markets. The market's neutral, essentially, looking for direction. I went into the let me go back here, choose the group. It's down under my users group, market analysis, major markets plus. Went in there, was in the warehouse. My top-down analysis, I sorted on the raw combo, and I can see where the strength is here based upon the very short term, 1 day and 5 days. I'm seeing strength in the semis, so what did I do? I went top down to see which of these stocks were the strongest, and I just came up with CRE based upon the top-down analysis. If you really want insight into what's going on in the market, you need to go top-down. There are a lot of ways to prospect, but to get a feel, you need to begin with top-down. Now, there are a lot of other things that I can do. I just don't want to make this video too long, and I may continue this top-down process in the next video or two, or integrate it into my process as I go along.